So Michael, some of the big news last week was that the rating agency Fitch downgraded the United States, right? So from AAA, the highest rating, to AA+. To start the conversation, can you just explain what does Fitch actually do and what is a debt rating?
Well, sure. So Fitch is a credit rating agency. They assess the relative risk and creditworthiness of things like debt securities, companies, or in this case, governments, on their ability and willingness to pay off their debts. The debt rating or credit rating is just an opinion on that credit risk. Fitch Ratings uses a letter scale, goes from AAA being the highest credit quality and goes all the way down to D, which means default. Ratings can also include a plus or a minus to indicate levels within those ratings.
Okay, so thanks for that understanding. So I kind of like the analogy of a personal credit score. So if you're just an individual going to get a loan, that lender is really assessing your ability to pay that debt.
Absolutely.
Like
Absolutely. Credit score would be a number and a credit rating would be that letter grade.
Okay. So when you think about this situation, what led to Fitch downgrading the United States?
Well, there are a few things that led to the downgrade. It wasn't just one major event. The high and growing level of debt that we've got in this country is certainly a contributor.
Mm-hmm.
The recent fiscal challenges, repeated debt ceiling standoffs that we've had in Congress, and also the increased interest service burden with the debt that's recently been issued. Interest rates are higher now.
Yeah, they certainly are. Yeah. So I'm trying to think back over the years. This has happened before, right? Or something similar.
Yeah, so a different rating agency called S&P downgraded the United States back in August of 2011 from AAA also to AA+, and seems like it's repeating itself, but it was also over a debt ceiling argument.
Yeah, that was over 10 years ago.
Yeah.
So is there anything, when I think about situations like this, is there anything investors should really be concerned about, do you think?
Short answer is no. United States debt and treasuries are still considered a safe haven investment. And our clients' portfolios are well diversified, and diversification is just really important. Right. You want diversification to mitigate risks, help you be able to weather economic uncertainties, or just handle fluctuations in different markets.
Yeah. Okay. So that diversification, really important. Do you think this will have much impact on portfolios at all then? Or what are your thoughts there?
Overall, this downgrade probably not going to have a big impact on portfolios, especially right now. There are other things that will have much larger impact. Things like what the Federal Reserve does or doesn't do is most likely going to have more of an impact.
Okay.
For investors and clients, we like to encourage them to just control what they can control. So Matt, let me ask you,
okay.
In your work as an advisor, what are the things you try to get your clients to focus on, or what do you want them to try to control?
Yeah, okay. Well, yeah, first off, thanks for your thoughts on all that. That's really helpful. And thanks for the question. Yeah, in our work with clients, we always try to help them to focus on exactly what you said, those things that they can control. And I like this illustration. It's an industry illustration, and it actually says the retirement equation, but I think it's really applicable to most people. And it sections things out from things you have total control over, things that are just out of your control, and things that you have some control over. And in the out of control bucket, that's things like market returns and items that like what we just talked about, stemming from the government or policy changes. But the things that you have total control over, that's things like saving, spending, and making sure that you have an asset allocation that's really focused on your unique situation. So really appreciate your thoughts today. That sums up our video, and we'll see you next time.